Hey everybody, how's everybody doing out there? Welcome to Fibonacci Fridays. I'm your host, Andrei Knight. You guys ready for some Fibonacci fun? Cool, well let's dig into it, you guys. Let's not waste any time. You are looking at a daily chart of the Euro USD. Probably you're thinking, wait a minute, daily chart? I've never left the 1 minute chart. Hopefully you have. It actually gets easier to trade the higher up you go. And no, you don't have to go as high as the daily chart. I use the daily chart for my daily planning. Those of you that have been to my other webinars know I'm a big fan of candle opens. I don't like making decisions mid-candle. So the first thing I do when I start my trading day, new daily candle, I start out with the daily chart. And I make my trading plan. And then I zoom in and trade on my favorite time frame. And as you will see today, Fibs are actually time frame independent. Okay, planning and trading are two separate steps. You need both. You want to know why most traders' results are inconsistent? You want to know why most trading robots will lose money if you let them run long enough? Because there's no trading plan. It's just entries. And most of the time, bad entries. But assuming good entries, an entry without context, you guys, is completely meaningless. No matter what kind of system you're using, no matter how good your system. If it's just generating entries, that's like pulling the handle of a slot machine. Sometimes it works, sometimes it doesn't. The entry might be good, and you might be right about the direction. But what if it goes 4 pips in your direction and then turns around? What if it goes nowhere and just chops sideways? How do you avoid those kinds of trades? I call those scratch trades. You know, just like when you're playing pool and you miss the ball. Scratch trades. How do you avoid the scratch trade? How do you find the entries that go and go and go and go? That's what we're going to look at today. Okay, not so much the entries themselves, though I'll give you a couple tips. I'm sure you all have your various trading systems and methods for finding entries. Good news is, you're not going to have to give them up. What we're going to cover today is not meant to replace what you're doing already. It's meant to add to what you're doing already, to give you more accuracy, to give you a higher win rate, and so that those trades have a higher chance of going longer. Okay? And then I'll drill down into smaller time frames. And in doing so, Boyke, I'll answer your question as well. Let's start with the macro, and then we'll zoom into the micro. And you'll see why it's time frame independent. But first, let me show you how you come up with a trading plan. Because this is what I think a lot of you might have been missing. Well, a lot of traders in general. Some of you I know, some of you I don't know. And welcome, by the way, if I don't know you. Nice to meet you. Okay, the difference between winning more often than not, the difference between having big winners and small losers, or small wins and big losers, is your trading plan. Okay? So I'm going to show you how to come up with a trading plan first, and then how to drill down and find the trade within that. Sound good? And yeah, it did, DZ Bizda. Absolutely. That's why we're looking at it. I just got out of this trade. Okay, I don't like to teach theory. I like to teach from real-life, hands-on examples. Okay, and in my pro room, you get to look at these as they're setting up in the morning. before they happen. But that's why I'm picking on the Euro USD, because I just closed the trade on it. It's still fresh in my memory. Alrighty, let's break it down, you guys. Okay. Let me show you how to use Fibs. Welcome, Mahmoud. A lot of people get scared when it comes to Fibs, right? That math stuff. Before you guys get all nervous on me, let me just tell you, I didn't do that well in math during high school. Didn't even study it in college. I didn't do so well in economics in college. I don't think that was all my fault. I had economics class right after lunch, and I had a professor who really didn't like to teach, so he would always turn off the lights and show a movie. Guys, what happens if you just ate a meal and somebody turns off the lights and shows a boring movie? Okay, that was my economics class. So no math, no economics required. Fibs are pretty simple. And after today, you're going to leave being a lot more confident on how to use them. What do I do well in Boyke? Trading. Neither a math nor an economics background is really required. Oh, in school, music, photography, theater. Those were probably the most interesting subjects for me. I'm in LA now, yeah, Linda, but I didn't go to school in LA. I grew up in Minneapolis. And funny enough, I didn't move out to LA for any of those things. You know, I always get asked, wow, you live in LA, so like, are you in the movies? No. Are you a musician? Well, yeah, as a hobby, not professionally. No. When I was a kid, I looked at a map, and I realized it's warm here. It never snows here. Literally, that was my main reason for moving out. My family's from Russia. I grew up in Minneapolis, so by the time I got out of school, and I went to college in Chicago. So by the time I got out of school, I decided I never want to see snow again, unless I'm going on a skiing trip. Well, thank you, Bista. I just do what I do, you know. I'm fortunate enough to have made a career in it, and I love sharing with other people. And that's why we're here today. Let's see. Candlestick patterns and formations. Let me see if they got it on my recorded webinars list. Let me see. You know what? I'll give you a link. I'm noticing they have them all labeled institutional trading strategies. They don't really say which one is what, Yuri, but visit that link and poke around. And also maybe visit this link. That's where I've got some videos up on YouTube. I don't remember if I've got one specifically on candlestick formations or not, but take a peek. And if you come next Wednesday, I'm actually doing another episode of institutional trading strategies. I wouldn't mind focusing on candlestick formations. just show up in class and remind me at the beginning. Because I'm going to do a whole bunch of charts and trading between now and then. I can't promise I'll remember. But poke around, see if you can find something, and if not, come back Wednesday and ask me that you'd like some coverage on candlestick formations. Alrighty. So let's get into it, you guys. Swiss Bank, yeah, Linda. I used to do some consulting for UBS. To use Fibs, you guys, you need 4 points. Okay? Actually, let me back up a minute. When is a good time or time frame, Boyke, to use Fibs? Generally, I reach for my Fibonacci tool. Different tools for different situations, you guys. I reach for my Fibonacci tool when I see a move, and then I see a pullback, and then I see evidence that the original move is starting to resume. In this case, well, gee, it's a no-brainer. We have a big green engulfing candle that completely covers the body of the red one. I'm boring Boyke. Sorry, mate. See you next Wednesday then. Oh, gotcha. I thought you were snoozing. This will be interesting, I promise. It'll be worth it. All right, so I got a bullish engulfing candle. That tells me the retracement is done, and the original move is starting to resume. Or as Boyke said, a zigzag. And thank you, mate. Appreciate it. That's the best time for a Fibonacci, you guys. When you see this kind of zigzag pattern. On what time frame? Wherever you see it. Every month I start with a monthly chart. New candle. Every Monday morning I look at my weekly chart because there's a new candle that opened there. Every day I start with my daily chart. Usually on one of those three, I will see a zigzag. And that's where my trading plan begins formulating. Okay? So you see a zigzag like this, you reach for the Fibonacci tool. And to use it correctly, you need to identify basically 4 points. That's all the math you need, you guys. I'm pretty sure everybody in this room can count to 4. Okay? Point A is where the down move began. Okay, where did the trend start? And you might be looking left and saying, well, it started here, didn't it? It did. I'll cover this in just a second. There's 2 potential bottoms. Okay? As a general rule of thumb, I will start with the most recent one. Okay? Even if it's not necessarily the lowest one. I start with that. But then I'll show you how to check to see if your fibs need adjustment once you've drawn them. Okay? And if they need adjustment, obviously the next place I'm going to turn to is this one. It is a little more obvious because of the thicker bodies. This is a thin wick. Maybe more market participants noticed this one than this one. But I'm going to start with this one because in my experience, the most recent one, even if it's not the lowest one, usually ends up being the one. If that makes sense. Point B then, as you might have guessed, is how high we got before that retracement or pullback happened. Okay. In that case up here, top of the red wick. Okay. Those of you that have been to my institutional trading strategies class, you might recall when we covered trend lines, I like to go by the bodies. Why? Because it's darn useful. For example, if I connect that green body on your left to this red body in the middle of your chart, I get this trend line. And lo and behold, we have a trend line break with a retest of support, and that's how we knew we were going higher. Trend lines are pretty useful things for finding changes in trend. and also finding anticipated support or resistance levels. See that? When I'm drawing a trend line, I'm after consensus. So that's why I use the bodies. The wick represents price that was attempted by the market, but then rejected. The body represents consensus. So that's for trend lines, because I'm kind of trying to find an average or a mean point. But in the case of Fibs, I am measuring distance. And when I'm measuring distance, I like to go wick to wick, furthest point to furthest point. Make sense? So you always have to, when you're wondering how to use a particular indicator, the best way, kind of ask yourself, what question are you trying to answer? If you're after consensus or averages, go by the bodies. If you're after distance traveled, then you go for the wicks. That's a good rule of thumb. Okay, so I'm going wick to wick, because in this case I'm measuring distance. I'm going to grab my Fibonacci tool. I'm going to click down at the bottom of the wick by point A. I'm holding my mouse down. I'm not letting go. And I go up to the top of the red wick by point B. And that's where I let go. And now look where we found resistance over here. Look where we found support here. Look how far down this wick came. Look at these ceilings here. Look at this wick. Look at these floors here. And look where the move ultimately went to. Exactly, Henry. And now I hope I've got your attention. Okay? Because market moves, while they have a certain element of randomness to them, in that markets are always reacting to news, new news is always coming out, they are also not completely random and somewhat predictable, if you know what you're doing. There's no way to predict the markets, you guys. But people, especially people acting in large groups, tend to be very predictable. I like to think of Fibonacci as a psychological tool. It helps me peek into the minds of my opponents and anticipate where they're most likely to enter or exit trades. Okay, it's a psychological tool. You're not predicting the market. You're predicting crowd behavior. Okay, Henry mentioned from the other top. Which one do you mean, Mahmoud? Up here? No. Let me show you why. Because remember, I said you use Fibs when you have a move, a pullback, and an indication of reversal. In this case, the bullish engulfing candle. So the top you're talking about has not happened yet. How can I put my fib up there? This is all you're seeing at the time. Makes sense? The other one simply hasn't happened. I guess it's down to internet connections, you guys. Sorry about the sound. There's not a whole lot I can do from this end, except maybe talk slower so you get more words in between the cracks. You know, maybe try closing a couple things if you have your own trading platforms open at the moment. Close them. That might give you more internet bandwidth to work with. Close any other apps you might have open, any browser tabs you're not using. That might help. We do use extensions, JP. Okay? Well, let me get to that part. You're getting a little bit ahead of me. Okay, so Mahmoud, we don't go off the other top simply because at the time it hasn't happened yet. Okay? I'm trying to make this, even though this is a trade I just got out of, I'm trying to make it as realistic as I can to how you would trade it as it was unfolding. You simply don't have this piece of information yet. Okay, so verifying a fib, you got. Henry mentioned snaps. Let me explain what those are. I have control over 2 points, A and B, right? Where I click my mouse and where I let go of my mouse after dragging it. I don't really have control over where the in-between levels are going to fall. The computer decides that based on its Fibonacci calculations. So, if I see, and this can be bodies or wicks, if I see price reacting to the in-between levels, that to me is more than coincidence. And that's how I know my fib is valid. If I didn't get very good snaps, well, as I mentioned, I would try the other bottom as a possibility. As a rule of thumb, I start with the most recent one, but why not try the other one? Okay? This red dotted line in between points A and B, that's there to remind you how you drew your fib, in case you forget. Double click on that red dotted line, and you get these two little white squares at each end. These are called handles. Now you can click on a handle, and you simply drag your fib over. Are my snaps better or worse? Well, this one is right on, so that's better, but look at all of my others. Now there's a space here. Now there's a space here. These aren't quite on it. You see what I mean? It's a little worse. I still have a snap, but I don't have as many snaps. Yep, the better they are, the more of them there are, the better your fib. That's why I call them snaps, Henry, because when you draw your fib correctly, just like the first time I laid this one down, when you draw your fib correctly, it just snaps into place. And that's how I know I've got the right fib. That's actually where the name comes from. It snaps into place. You know, now look at these bottoms. Remember where we had the space before? Look at where price is chopping now, for crying out loud. You know, so I'm pretty sure I've got the right fib with this A and this B. And it's trial and error, you guys. Just try it. Don't think too much about it. One will look better than the other. Go with the one that looks better. Now, to talk about extensions and retracements, JP, let me explain a little bit about the numbers you're seeing on the right-hand side. Some people, when they see my fibs, they're like, oh, you use different fibs than everybody else. And they're more or less the same fibs. You know, we did a little math. We discovered some in-between levels that are less common, but still follow the Fibonacci formula. But basically, the main difference is you're seeing retracements and extensions at the same time. On most trading platforms, it's two separate tools. And what I mean by that, point B, where I let go of my mouse, we call that the 0 point. Every single day, Boyke, it's my favorite tool. Hands down. It's not my only tool. Remember, fibs by themselves are not a trading system. They're a tool for your toolbox. They can be part of any trading system. That's the cool thing about it. You don't have to stop doing what you're doing already. Okay? So this is the 0 point. You know what I mean? I started dragging from here, but my fib really wasn't completed till I let go of here. So this is technically my starting point. That's why we call it 0. As I move back towards A, like this retracement did, you'll notice the numbers count up. This is the percentage of retracement. So, for example, 50 is 50%. And if I move my mouse over here, we can all agree that we're about halfway between A and B. Make sense? This is the percentage of retracement. And all the numbers above 0, as the trend continues, JP, are all greater than 100. because this is the percentage of extension. How far past B did we go? Okay? So you're seeing both. You're seeing retracements and extensions with one mouse click. That's all it is. It's a little bit of a time saver. And here's a link for you guys. This is to my forum, to a discussion thread on Fibs specifically. And right in the first message, you will find a PDF document attached. That'll show you step by step with screenshots how to make this modification to your Fibonacci tool, if you're using MetaTrader. If you're not using MetaTrader, well, I can't possibly account for every trading platform out there. You're going to have to figure out how to get into the Fibonacci properties on your own for your particular trading platform. But once you find the Fibonacci properties or settings, the numbers given in that document will still work. I'm getting to that, Mahmoud. Bear with me. Before we can think about target, we have to think about the retracement. How far back did we retrace before the original A to B move resumed? That becomes our point C. And you'll find this also in the document. You'll find it for all these values. But basically, Fibonacci boils down to this, you guys. Measure A to B, sit back and watch for C, and once you know where C is, you know where D is going to be. D, Mahmoud, being your target. Okay? And like I mentioned, all of our C to D movement rules are going to be in that document, the PDF document at the above link. But these three by far are the most common ones. The ones you're going to see the most often, and the ones that have the highest probability for success. Now, nothing works 100% of the time, obviously. We're talking highest probability. Okay, that's still not the same as 100%. New piece of news, market might reverse on you and do something different. The good news is, you guys, the ones that don't work out, meaning don't go straight to D or your target, are not necessarily losing trades. Because once you learn how to spot reversals, you might just have to get out early, ahead of your intended target. We're not to that part yet, Mason. We're still formulating our trading plan for the day. You need a plan before you need an entry, unless you want your entry to lose. Okay, number one cause of losses, not having a trading plan. Number two cause of losses, patience. Thank you, Boyke. All right. So the three most common retracements, you guys, are these three right in here. Let me give you those movement rules. Don't bother with the others yet, though when you get curious, they're in the document. Start out with the simple and common stuff. Always, Boyke. I'm used to it. This ain't my first rodeo. If your C retracement goes to 38, you guys, more often than not, your target is going to be at 138. If your C retracement goes to 50%, more often than not, your target's going to be at 161. And if your C retracement goes to 61, more often than not, your target will also be at 161. So, based on what we covered so far, can you guys give me my target price for today's trade? Not for the ultimate end of the move, but for today's trade. Price. Price. Thank you, Don. Though you're wrong. Nice try. Ramesh, you must be on a different currency pair. Price, Umar. Who can give me my target price? Thank you, you guys. There you go. Ramesh, no. Wrong decimal point. But yeah, now you guys got it. Thank you, Mahmoud. Thank you, Don. If C retraces to 6, because the reason I'm being so picky, you guys, you can't put in your trading platform as a take profit 161.8. You use 161.8 to find the right level of your fib, but ultimately what you need is the price. Okay? Now here's the thing though. You guys got the right general area, Don and Ramesh? Umar, yep, you got there. Here's the thing though. I'm not going to put my target right on that level. And Don, Mahmoud, I certainly wouldn't put it beyond where I expect price will go. What I actually do is I set my targets a little bit under this level. Okay? Good rule of thumb. Once you figure out where to put your stop, put it a little wider. Once you figure out where to put your target, put it a little tighter. Because if you found a really obvious price level on your chart, I assure you, the bank traders are aware of it as well. Okay? So, you might be aware of 3806. Guess what? They're going to do a reversal at 3804 just to screw with you. Because that's what bank traders do. If you found an obvious spot for your stop at 3682, they're going to go a little bit beyond it to stop you out and then go to your target without you. There's actually a term for this in banking circles. Remember, I used to consult for a bank. They call it freeing up liquidity. They don't call it running stops. But yes, they do it. It's called freeing up liquidity. So if you want to put your stop here, put your stop here instead. If you want to put your target here, you think everybody's going to take profit and sell at 3806, put your stop a little earlier. Okay? Because that's where the sell orders are likely waiting. And you're absolutely right, Don. You know, if we're anyway, take off 3-4 pips from 3806, now you're 2 to 3 pips away from a round number. So why not put your target, say, at 37.98, 37.99? If you're near any round numbers, do take that into account. Absolutely. I'll get to the lower time frames, Don. Remember, we're formulating our trading plan first. Somebody asked about 200. And JP, you're asking where it goes next. Remember, this is a daily chart. I can answer that question for you Monday morning when I get a new daily open, a new daily candle. But what I'm going to look for, I can tell you what I'm going to look for come Monday morning. Is this 3806 level that we've already identified, is it my floor or ceiling? If it's my ceiling, if I close underneath it and I open underneath it, my next long-term target, maybe not in one day. You carve out individual trades on smaller time frames. But my next long-term target will then be a return back to zero. Or in other words, 3682. Anything beyond your D target, if it's not enough just to break it, you guys, it has to retest from the other side as support, meaning I have to open. I have to have a new daily open above 3806. If that happens, then my next target becomes the 200% fib or 3882. Okay? Anything beyond your D target, and I should probably put that on my chart, just in the interest of completing our 4-step plan, right? Anything beyond my D target, you go one Fibonacci level at a time. So what I mean by that, realize that if my retracement had only come to 38, then my D would be 138. And this would already be the first bonus round. This would then be the second bonus round. If it happens, it's not guaranteed to. I need a retest from above as support to activate any zone beyond D. When do I scrap and draw a new fib? Several scenarios will make me do that, Steve. Whichever one comes first. I find a better fib in the opposite direction. The fib completes its retracement back to 0 after it reverses 161, at which point you usually get a bounce at 0, which, guess what, creates the zigzag you need to go in the other direction. And the third scenario where I would switch to a different fib is if I notice my levels are no longer snapping, my in-between levels. And that's usually because the other market participants found something better to look at. So when a fib completes by going to 0, when I'm not noticing any more snaps, or very simply, when I find a better one. Okay? And that, Mahmoud, that kind of ties into your question. If we see another better fib, if I notice this one's not snapping, or if I complete the logical move, not just to D, but I've noticed once you reverse, be it at D, be it at a bonus round, you work your way down the same way you work your way up. If we came up here and here's where the downside reversal happens, then my next trade's going to be from 200 to 161. My next trade, if 161 breaks and retests from underneath as resistance, as a ceiling, then my next one would not be to 138, it would be to 0. Unless my C was at 38. In which case, then I trade to 138 and then to 0. For that, check the document, JP. If I go in each one of these individually, I'm going to use up the entire time, and we're not going to get into how a trading plan becomes an individual trade. But they're all listed in the document, okay? So let's get into this. Let's get into today's trade and how it manifested. And I'm only going to do this using fibs, you guys. Keep in mind in my trading, I do combine fibs with other indicators, just like you will with whatever system you're using. And if you want to know what some of my favorite indicators are, well, join me for my trading strategies class on Wednesday, institutional trading strategies. Because that's where I go over what indicators I like to use together with fibs, under what circumstances and in what combinations. Okay? Today I'm going to work on just with fibs. But obviously, the more confirmation you have, the earlier you can get in, and the more of the total move you can capture. This is very rough. We didn't catch the very bottom. We didn't catch the very top. But I'm using one indicator. Okay? Accuracy improves as you add more to your analysis. Okay? This is intentionally rough. Because we're just focused on fibs. And in general, so it overshot it a little bit, you guys. It's okay. The third reason for losses with traders, being too perfectionistic, trying to nail that exact reversal point. The thing is, the closer you get out to the edge, you guys, Boyke, didn't I just say I'm going to zoom in and get to that? I didn't realize you're one of the noobs. You've been to a few of these. I know what you're doing, so I am going to pick on you. Well, a range is a different situation, Mahmoud. Why does everybody want to talk about everything other than what I want to talk about? 5 more minutes, we're not going to get into entries. Ranges, Mahmoud, Fibs are basically a trend following tool. Okay? Ranges are not a trend. But very often, you will find that ranges do tend to form between Fibonacci levels. See that? As a general rule, trading ranges is really, that's the topic of a whole webinar in and of itself. Time independent, Mason. What is dependent, like here, for example, we had a pretty severe pullback. But notice it stopped at 0, going by the bodies. Always, Mike, I tend to attract them. We stopped at 0, so I kept this fib. Had we broken 0 and then retested it from underneath as resistance, Mason, I would now have a downward-facing zigzag and enough information to draw a new fib. Remember what I said? I'll switch to a new fib when I find a better one. But in this case, 0 held, so I stuck with this fib. It's not a matter of how many candlesticks. It's a matter of how price behaves. And it's totally Elliott. Don, one does not replace the other. Remember I said fibs work well with other systems. We got your 3 up waves with 2 waves in the middle. That actually makes me suspect we probably won't get a bonus wall, because now it's time for 2 down waves in the Elliott sequence. It actually works really nice together. Elliott tells you which direction the next wave is likely to be in, Don. Fibs tell you how long that wave is likely to be. It can be anywhere you see a zigzag, JP. As I said, start with monthly every month, start with weekly every week, start with daily every day, formulate your trading plan, and then zoom in to find the individual trade for that day within that trading plan. Okay? So in this example, I have a hammer or a hanging man. Its neckline is right above support. I have a bullish open. When I opened up my chart this morning, I didn't see this wick yet. I had a bullish open relative to a bullish hanging man. So my window of opportunity, as I like to call them, my trading plan is that I want to go from here to here. And a very likely spot for entry, don't you think, would be if we break this resistance level. Remember, we start the day down here. Wouldn't a very likely entry point be if we break this ceiling and then retest it from underneath as a floor? You see what I got? I got a complete trading plan. I know what it's going to take to get me into a trade. I know where my target is. I'll show you stops in just a moment. Let me drill down further. Okay. 4-hour chart. I need the 4-hour chart to be bullish. Well, I'm looking at today, Boyke. Just today's trade. Looking at this, let's see, 1, 2, 3, 4, 5. Yeah, this is my 5th one. This fib that I drew back in February has since resulted in 5 separate trades for me. More if you count the little news trades, where I get in and out, fairly quickly. Just talking long-term swing trade. This one fib that I drew back in February has now resulted in 5 separate trades. Okay? One entry would be here. Why would I talk about mid-February? I'm talking about the trade I got into and out of today. Okay, so 4-hour chart is where I determine direction. I know where I want to go from. I know where I want to go to. Now I need to answer the question, when do I want to do it? First thing in the morning, lunchtime? You know what I mean? When we turn bullish is the simple answer. Well, I had a red candle here. I have a green engulfing candle here that broke resistance. I would say we are bulls. Remember, my criteria was breaking above the 118, right? Preferably retesting it as support. And I want that trigger to happen whenever the 4-hour chart confirms that I'm bullish. I'm bullish. So I'm going to drop a vertical line on that candle. And basically, you guys, look what we did. We narrowed down our window even further. I want to go from here to here, and I want to do it anytime right of this line. I cut my square down to 1/3 of what it was before. Once again, I want to go from here to here. My criteria is breaking this, retesting it at support, and I'm willing to do that anytime after this vertical golden line. I put the vertical golden line so as I switch time frames, I can find the same exact spot. Now let's go to the 1-hour chart. This is where I hunt for entries. Okay? And actually, I'm seeing maybe my criteria was a little too strict. Because I'm going from this point forward, what do I see? Smaller bodies, a green engulfing candle, bigger body. You know what, you guys? Just based on this, I would pull the trigger at the open of this candle. That's enough information for me. If you're a little more conservative, then wait till you break the level in question. If you found support here is implied. You don't have to touch it to prove that it's support. It's not about the touch. Price action tells me we found support here. Support here is implied. We already know where the target is. Let's talk about stops. Well, if this is where we reversed, where we found support the last time, that means there's a support level here. My rule of thumb for stops is 2 support resistance levels away. So here's one based on price action. Here's another one based on my Fib. This would be a good spot for my stop. The distance to your stop from your entry should always be shorter than the distance from your entry to your target. The target should be at least 3 times longer. Otherwise, I might have the perfect entry signal. This is something else robots don't do. I might have the perfect entry signal, but I won't take it because my risk-reward ratio isn't satisfactory. Okay? Context and judgment. 2 things a robot doesn't take into consideration when they take every entry signal the system generates. Don't trade like a robot. Now you might be thinking, well, this stop is still pretty far. It doesn't matter how far. It matters how far relative to how far the target. For this far a target, this far a stop is acceptable. And keep in mind I don't have any other indicators. Add some pivot points, add some moving averages, your stop can probably be tighter. It's any 2 support levels away. And then again with a little padding, not right on the line. So let me measure this real quick. From my entry to my target, that's 101 pips. Not bad for a day's work. Distance to my stop, even not using any other indicators, 21 pips. That's a 5-to-1 risk-reward ratio. That's even better than a 3-to-1. For those of you saying, well, if the perfect 3-to-1 trade never comes along. It does, you're just not patient enough. This is a 5-to-1. I've seen 10-to-1s. Think about that for a minute. You have to lose 10 trades in a row after your winning trade just to get your account back to break even. You still think it's hard to make money trading? You have to try to have 10 losing trades in a row. You guys aren't just holding out for a good enough trade because you feel every day you're at the chart, you have to trade something. No. You trade the good stuff when it comes along. And if you don't get it, I mean, look at all this chopping here. I don't mess with that stuff. My time is too valuable. My trading capital is too valuable. I'll take a trade when I see a trade that's good enough. And if I don't, I simply wait as long as it takes. I'm after the good ones. How many pairs do I look at on a daily basis, Maverick? I mean all of them. I'll start out my day looking at my daily chart. From that, I'll pick maybe 2 to 4 that look the most promising to keep watching that day. Or maybe it's more like, I guess, 4 to 6 to keep watching that day. But then I'll narrow it down using the 1 hour, 4 hour chart to the 1 or 2 I want to trade right now. And then later in the day, I might recheck my higher time frames to see if I want to do any others. So I monitor all of them. At any given time, I'm not trading more than 2 to 4. It's too much for my brain to handle because here again, it's not about the entry. It's not about getting into the trade. Because what are you going to do when you're in it? What about managing your trade? Adding to positions, subtracting from positions, trailing your stop. If you want to take an all or nothing approach, that's called Russian roulette. I may be Russian, but I'm not into Russian roulette. Okay? It doesn't have to be all or nothing. So there's this whole other thing called trade management, Maverick. Not just getting into trades. And I find I can't do it effectively for more than 2 to 4 pairs at a time. And if I can't manage it well, why am I getting into it? It's wherever you see them, JP. You're asking about highs and lows? Look for the bends and the elbows. You need 3 of them to make a Fibonacci. So however far you have to go back to find 3 of them. Alrighty, you guys, some links for you, and then I'll finish up, I promise, FX Admin. Thank you for your patience. Daily newspaper, you guys. We publish one every day at 8 a.m. GMT, totally free of charge. I have robots that scan the web for the most often read financial headlines. And I compile them all into like kind of one front page for you with links. Check it out. You can have it delivered to your Twitter or your email box free of charge, or you can just visit that link every morning, whatever you prefer. But this is very often where my trade ideas come from. And then I go to the chart and start reaching for my tools. Here's my Twitter, my Facebook, you guys, if you'd like to keep in touch and follow what I'm doing. Obviously, I only covered one tool today, Fibs. As I mentioned, I do use some other indicators to confirm Fibs. I've got some recorded webinars that cover all of them, even more than I get to cover in my institutional trading strategies class, because I'm limited to an hour. Okay, here's where I cover all of them. I get into things such as money management, risk-reward ratios, probability, even trading psychology. Literally, I tried to make a complete course, everything you need to be successful. Okay? And then the second link, you guys, we do live classes twice a day, every trading day, 10 times a week, 40 times a month. Just like you saw here, I set up my trades in the morning so the class can follow them. And then I come back in the afternoon and we check and see how everybody did. What worked well, what didn't work so well, what we can fine-tune for the next day. You know, if you found today useful, imagine what a month of that is going to do for your trading results. And here's the good news, it costs less than a losing trade. So stop wasting your money down. Which one should you do first? It doesn't matter. If you buy the workshops, I'll give you a discount on the live training so you earn the price of the workshops back. If you go straight to the live training, I'll throw in the workshops. It just depends if you prefer to watch videos or interact with a live group. Everybody learns differently. If you decide to do both, you'll spend the same amount of money regardless of which one you do first. We're not going to charge you twice for the same piece of information. I only trade one trading system in the end because it works. And if you're on a budget, money or time-wise, we have what we call the weekly video updates. This is where I just send you the recording of the Monday morning video each week. Why that one? Because that's where I'm on my weekly chart planning out my scenarios for the week ahead. It's kind of the most important one. Okay, but you don't get to interact, you don't get to ask questions. But hey, you get what you pay for. So 3 different ways, you guys, you can learn and take this to the next level. But even if you don't, I think I gave you enough already to improve any trading system you might be using. Okay? Tons of free stuff at fxnight.com as well. I don't want you to think that this is all about selling you guys stuff. I make enough from my trading. These are just some additional resources should you choose. Everything else on FX Night is free. We have streaming news, got a free chat room, free forum, plugins and indicators for MetaTrader. It's a really cool, vibrant community of really serious and successful traders, and I encourage you guys to plug in. And finally, a request, you guys. The reason I teach these classes, I don't get paid for them, I volunteer. So many times people will come to our training and they go, wow, I wish I found you earlier, before I lost all that money. Don't lose your money on trial and error. Let us help you make money. The room will pay for itself within 2 to 3 months, I promise. I can't guarantee overnight success, but almost all of my traders, if they follow the system, are profitable within 2 to 3 months, consistently so. But beyond that, you guys, I hate it when people come to the room and tell me stories, oh, I lost all my money, I wish I found you earlier. So if you found today useful, I want you to come back for my Wednesday Institutional Trading Strategies class and bring 2 friends with you. Help a fellow trader out. I teach these classes for free. That is the only thing I ask for in return. Share this information in my webinars with a fellow trader. Thank you guys so much. I wish you a fantastic weekend, and I will see you on Wednesday.